emergency video to gold price breaking below the 200 moving average, confirming the breakdown. The waterfall sell-off continues. The uptrend that has been in place since December 2024 is in immediate danger to be broken to the downside. In today's video, we're going to look at the technicals. We're going to look at the three major factors that are influencing the gold price right now. We got big signals there as well, and they're not good. But the short-term pain gives us the opportunity to position us for the long-term gains, and they'll be big. This is the waterfall sell-off that we've been waiting for before the next leg higher in gold. This is a very important video for gold investors and gold mining investors. Let's get right into it. Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks, and month. Welcome to Hot Trades of the Day. My name is Daniel Wilhelmi, and if you watched the Mandalorian and Grogu Star Wars video that was in movie theaters, man, if I was Grogu, you know, I would use, like, I think he has 3 fingers. There's my 3 fingers to use the force to move the gold price. Yes, I would love to do that, but that's not how markets work. I've told you this before for weeks when I've been warning about the breakdown. It's exactly playing out as I've said here for weeks now. We're getting the waterfall sell-off. We're breaking below the 200, and now we're attacking the uptrend in gold. Look, this is how markets work. We have to trade the markets that are ahead of us and not the markets that we would like to have. Gold is in real trouble short term. The 200-day is almost certainly lost. We haven't confirmed yet in US trading, but in Asian and in European trading, we are going lower, and we're seeing the second leg down of the waterfall sell-off. If we zoom in on the gold chart, you see the next big down move in gold will be triggered if we break the downtrend and this Fibonacci retracement here, which is double support. We break that, this is where a ton of the stop's going to be. We're going at least going to retest the lows, which is around 4,100. If we hold higher than that, that would be very, very bullish. But more likely is a test of this zone, which you see here, around 4,000, what is that, 4,050 to 4,000, maybe 3,950. This is the target zone we have to look at, which would be an interesting bear trap because it would undercut the March low that we saw, this big sell-off low. The RSI is getting there. It's getting into the oversold territory, but here's the thing. I've said on this video for months now, you cannot only look at the gold price, and please don't be one of these gold fanatics that live in their little gold bubble and just look at things like the debt market or inflation data and just say, well, the gold price has to go higher. It's not going higher right now, okay? Will it go higher long term? Yes, it will. But it's not going higher short term. So we need to adjust accordingly, and you know what the adjustment means. I've said this on this channel for a month. If you missed the videos, hit the subscribe button. It is, we want to buy this weakness. This, in my opinion, will be the big fake out to the downside that's going to shake out the weekends before we get the next leg higher. But short term, boy, there's a storm brewing for gold, and it starts with the dollar. Look at the Dixie monster jump on Friday on the back of new economic data, and we have reached parity. Again, if you watch this channel for weeks, I've told you, hey, watch the dollar. This is looking better than people think. You can see the downtrend that's broken that I put in here and pointed it out. I pointed out when we broke the 200, the golden line that you see in the chart here. I said it when we established ourselves in this bull flag above the 50-day, the purple line. I said, the dollar's looking good. We break above this pink resistance zone. We're going right to parity. That's where we are right now. That's putting pressure on gold. All right. So that is the main problem that gold is having. We're seeing the strength in the dollar. And we'll get to the other two factors as well. So this is what the long-term picture in the dollar looks like. We've seen a nice bottoming formation that's not complete yet. It'll be complete if we break through this yellow resistance zone that you see here, that we have doinked off since 2025. Once with a bull trap, twice, 3, 4, 5, 6 times. This is number 7. If we break this resistance zone and the dollar goes higher, which would probably be around this area, 103 to 104, then that's going to put some serious pressure on gold. Now, I want to point out, if we look at the long-term chart, this means nothing, right? You can see we're still in a downtrend in the dollar. It's devaluing. This is the monthly candlestick chart. I need to move this out here for you. And once we break this uptrend, I've said this before, that's when the floodgate's gonna open. But we might go higher first, right? We might trend the upper end of this downtrend channel, which is around 107. So that might happen first. The overall direction in the dollar is very clear. It's negative. The dollar is devaluing. And we see this, by the way, in the reserves of the central banks around the world, where gold now officially has overtaken the dollar as the number 1 reserve in the world. But short term, we're back on the daily here. You see this, the dollar is gaining strength. This is a good looking chart. Now we doink off this yellow resistance zone, we get the weakness going. That could help gold to stabilize. And we will see what has happened with this. Now, the second factor, oil. Starting to stabilize as well, around $90 to $95. This is not a party time for the oil bulls yet, but this looks way better than what the oil bears would have liked to see, because we broke this triangle formation to the downside, but we got no follow through on the sell-off. Instead, we doinked off the support of the sideways channel that I've pointed out now for about a month. I think a little longer, it doesn't matter really. In oil. And if we get above the 50-day moving average, watch out for oil going over $100 a barrel, going back to probably around $107 to $110 a barrel. Then you'll see inflation panic coming back, which means the probability of rate cuts going down, the probability of rate hikes getting back on the table. That is negative for gold. Now, long term, that's positive. We know this, but short term, it is not. So the oil price is improving as well. That is not good for gold short term. It is good, however, for your energy stocks, which I've been telling you, hold on to your energy stocks. No reason to tell them. And that is playing out right now. Again, if you missed those videos, subscribe button. Helps us out. You do me a giant favor. Helps the channel grow. I put in all this work for you. All I'm asking for is, hey, support us with a subscribe button. And that's it. And it helps you out as well. Now, this is the second factor. Now we go to the bond market. This is the big one, because we know that's the one where we saw the breakouts, and that put pressure on gold in May, and we see this with a 30-year. This does not look good for gold. And again, I've told you this in previous videos. I said, hey, the bonds are building out structure here. Downtrend is broken with a 30-year. Watch out. We're establishing ourselves above the 50. This is exactly what's happening. Bonds are moving up. We're going to go at least get a gap fill right here. More likely, we're going to attack these highs. That will put additional pressure on gold. 10-year, same thing. Downtrend broken, good structure, breakout. Now we're trying to break this downtrend here that has been in place since 2023, again, after we failed the first time. But this is no doubt a big, big warning for gold. So the three main factors on top of the pure technicals in gold, which, as I've been telling you, are really important because a majority of the investors simply use trend following methods. And this is the gold price right here on the daily, are negative for gold short term. Long term, as I pointed out, the higher oil price, good for gold and good for the gold mining stock. Well, partially good for the gold mining stocks. It will increase energy costs, but if the gold price goes up and compensates for it, it's a wash. So, but it is important, and keep this in mind, please. It is important that now, with the elevated energy prices, and they will stay higher if you look at the rise in energy demand. And I was just on a call last Friday with a company from the uranium nuclear energy sector, and they were saying, Daniel, even with all the nuclear reactors that are getting built, it won't be able to meet the energy demand that's coming. So what does that mean? That means energy price is going to stay higher, inflation is going to stay higher, stagflation risk is coming. That's great for gold. For the mining stocks, if you analyze your mining stocks, that means you really have to watch out, what are they doing on the energy side, right? If they're running on diesel generators somewhere in the jungle in, I don't know, Costa Rica to drill their gold, to build their mine, they might be in trouble. So pay attention to this side of the gold miners when you analyze the gold miners as well. So right now, obviously, as you can see here, the uptrend in the charts, that is the most important. And I'm zooming out here so you can see how far back we're going. This is the uptrend. This is right here you see this is the long-term uptrend, and here is the uptrend that started this whole rally that happened in 2025, beginning of 2026. So all of this is right now on the table if we break below it, and this really becomes a confirmed medium-term breakdown and not, as I would anticipate and what I think it is, a monster fake out. We get a flush sell-off, a waterfall sell-off, where we will get a scenario like we got in March, where we broke the 50-day waterfall sell-off with a big down day and then an intraday reversal. And then all the people that panicked and didn't know what's coming are freaking out, right? I still believe this will be a fake out to the downside and then will break this triangle formation to the upside. Why is that? Because the mid to long-term factors are positive for gold. By the way, new data out from the World Gold Council for April. Central banks, net buyers, again, by 17 tons. Here is the graphic. In March, we had the crazy month with a net sales of 30 tons, but that was, again, as we talked about in previous videos, if they missed them, hit the subscribe button. That was Russia selling their gold to finance the war because the economy is in real trouble there. And that was Turkey selling off gold reserves, trying to stabilize the Turkish lira. Now, Turkey in April was about flat. And as soon as that happened, you see we're going right back to net buying of the central banks. Biggest central bank to buy in April was Poland with 14 tons, followed by China with 8 tons. Very interesting. This is not only the 18th month in a row that the Chinese central bank has been non-stop buying gold. This is the highest level of gold buying by China since December 2024. So they are using this weakness to be aggressive in the market. So the central banks are still buying. The fundamental factors long term clearly speak for gold and for silver. But short-term headwinds are there, and things will get darker before they get better. But that's why you have here our show Hot Trades of the Day, because we're going to try to keep you focused in the emotional short-term panic on the fundamental medium to long-term facts. Like I said, with the emergency video for silver that I published on Saturday, if you missed that one, you want to know what's going on in silver, please take a look at that one as well. Silver today in immediate danger to lose the 200-day moving average as well. By the way, short-term, gold looks worse than silver. And you know the reasons why it is. It's the Dixie, it's oil, it's the bond market. Those hit gold harder than they hit silver. Get your watch list in order. I'm going to start this week to present to you some gold and silver miners that I consider to be interesting, that I hold myself long term, or that I'm buying myself, to help you maybe create your own watch list. I don't know if you like the mining place that I like. I mean, I'm not your financial advisor, you do your own thing, but it might always be helpful. So that's coming up this week, and in order not to miss the videos, hit the subscribe button. That's it for today. Have a great start to the new week. Have a good day. Bye-bye. Let's go, Knicks.